Good morning, Steve Fried with the morning grain comments. Markets are somewhat mixed overnight. You've got beans up about 4 cents, corn down a penny, and wheat up 7 cents. Equities looked open lower again. We did note that yesterday at a conference with 100 bank CEOs, they raised concern about a recession. And we're beginning to see banks make employee layoffs because of earnings. We also note that crude oil is about unchanged, but has been on a steep decline on concern about global economies reducing demand. And here in the U.S., more EVs reducing gas demand. So we'll be looking at some ethanol data today to see if stocks continue to rise. Over in the bean market, watching Argentina weather, some people are lowering their soybean crop estimates below the USDA's numbers. Doubt if the USDA makes a lot of changes on Friday. But there is a little bit of weather premium added to the soybean market and soybean meal market if their crop is lower, their crush is lower, and some of that demand for both meal and beans shifts to the United States. We continue to see liquidation of the long oil and meal spread, which is helping meal make new highs because of the recent EPA mandate suggesting lower demand for soybean oil for biofuels. Over in the corn, again, market continues to leak a little bit lower on the lack or at least concern about demand. Corn exports commitments are below a year ago, and the USDA on Friday could lower corn exports and raise the carryout. We'll also be watching again the ethanol data and also tomorrow's export sales to see if there's any pickup in demand because of concern about Argentina corn or the fact that Brazil may have their export capacity full and could be a little bit of demand shift to the United States. But still, overall, Ukraine corn export prices continue to be below U.S. Over in the wheat, market continues to be oversold. It's hard, though, to find any news that is supportive to the wheat market. U.S. plains continues to be dry, but again, we're hoping that La Nina makes a shift and that by early 2023, we'll start seeing some shower activity in the southern plains. We also note that Russia continues to offer wheat at low prices and export demand continues to be on the low side relative to some of the USDA numbers, even though USDA is forecasting lower world wheat trade than a year ago. We also note that in China, their imports demand so far this marketing year is below USDA's pace needed to reach that goal. And we also note that they need to buy about 35 cargoes a week to meet that 98 million ton goal. So that might be something that the USDA is going to have to address down the road, even though China is relaxing some of its strict COVID restriction policies. So as always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day.